It was a quiet day on Wall Street as we saw the S&P 500 fall by 0.16%. However, before falling, we did hit another all-time intraday high. We also saw the Nasdaq Composite close just a touch higher, and that was noteworthy because we went from having a weekly bullish intermediate posture to now a strongly bullish intermediate posture, kind of catching it up to the other three indices. However, Nasdaq is still sitting right at its 30-day moving average, so there's a lot left in this story. We'll take a look at all of that, see what it means for the posture of all of our other asset classes, and then wanted to take a look at a bullish swing trading idea on a auto parts manufacturer in our trade application example. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's Tuesday, March 16th. For those of you that are new, welcome aboard. Remember to go on over to YouTube, click subscribe on our channel, and then go down and sign up for our email distribution list so that way you can be notified whenever we post these videos. We also have a presence on Twitter. Feel free to follow me. My handle is @BrandonVanZ, and we really appreciate those of you that click like and retweet on these Market Outlook related tweets. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's jump into today's activity. And before we get started, since it's on my mind, be aware that I am taking a vacation day on Thursday. Most of you know that I do these videos on Tuesdays and Thursdays. So this Thursday, 2 days from right now, there will be no video. So just don't want you to be surprised that particular day. I will be back a week from today for the next Tuesday edition. Anyway, as we get started here, you can see I've got chart 4B pulled up here in front of us. And this will be a good kind of bird's eye view of the four major U.S. equity indices, try to get a sense of what the market forecast suggests from a posture perspective. And remember, with this particular chart 4B, it makes it nice and easy for us because the background colors can tell us what that posture is. And when we have this darker shade of green, it means that we have a strongly bullish intermediate posture. And I'm kind of hovering right here on the Nasdaq Composite and also kind of verifying what I had mentioned there in the intro, in that the Nasdaq Composite switched today from that light green background color to this dark green background color. The reason for that is because of how the computer programming language is coded. Down below here, you'll notice this green line, which is what we use to take the temperature of our intermediate posture. Remember, the green line is known as the intermediate term line. Anyway, when that line starts rising between 20 and 80, we consider that to be bullish. What is strongly bullish versus weakly bullish is determined by where is that line at any given moment in time. If that line is rising but is not yet crossed the 50th percentile yet, like had been the case in recent days, then that's why that background color of the chart is light green, telling us that we have a weakly bullish posture. Now that this green line has crossed through the upper half in this indicator, we can now say that this is a strongly bullish intermediate posture. However, like I mentioned in the intro, I don't know if I'm fully sold on this yet, mostly because we still didn't have an adamant break through that 30-day moving average. You can see right here we closed basically right on it. At one point earlier today, we were trading above it, but we weren't able to close there. A lot of these markets did have a little bit of a sell-off later in the day, and so by the time it was all said and done, we basically closed right on that line. So while our posture has gone to strongly bullish, certainly the chart could look a little bit more secure here. I tend to think that these other charts are still a little bit stronger, but we have seen the Nasdaq Composite have the capability of rising or falling quite quickly because of its makeup. Many of those large cap growth-oriented tech names kind of driving the activity there a little bit more than some of these other indices. And so I certainly won't count them out, but at this moment in time, given the choices available to me, I think I'd probably still opt to take trend trades in something like the S&P 500 as opposed to the Nasdaq Composite. When we're looking at these other charts, again, just to reiterate, we still have those strongly bullish postures, but that's not anything new. We've had those. We almost had what was known as a bullish intermediate confirmation signal on the Russell 2000. I say almost because we were just a hair away. That red line is at 20.14 and falling. So what I would be looking for there is if the red line were below 20 on the same day when the green line is strongly bullish like it is right now. So in this case, we just barely missed it. But be on the lookout for that. It is entirely possible that we could get it as soon as tomorrow if we have another little bit of a sell-off there. Remember, with the Russell 2000, it kind of cut through its 30-day moving average a little bit more aggressively there, and therefore when it finally was able to get up here and hit a new high, it almost felt like it was a bit exhausted at that point. Remember, the Russell 2000 had been up 1, 2, 3, 4, 5, 6, 7 days in a row up until yesterday when it hit that new high, and then today is kind of given back the last couple of days worth of upside action. Now, where we stand with the Russell 2000 is an interesting location because we're sitting right at the same level where we had resistance back here. Notice if I kind of leave my cursor right there, and you guys can kind of use that crosshair function there that you see and kind of, drift your eye over to the right, and you can see that's effectively where we bounced today, was where we had old resistance over here. And there is a technical analysis concept that suggests old resistance becomes new support. Obviously, that's not a guarantee, but it is at least one thing that you can start to kind of establish your expectations off of. And so that was at least a good sign that we were able to bounce right around that level and we didn't continue to cave further. We'll keep our eye on it. Right now, it does give you the impression that we're kind of rolling over here a little bit on the small caps. And if that does indeed take place, then the next thing I want to look out for is how does it react when it gets to the moving average again. This was a little bit more concerning the last time around where we kind of got below that moving average a little bit more aggressively there. Remember, previous to that, it was acting fine. It would touch the moving average, touch the moving average, touch the moving average. It almost did it back here as well, and it never really caused any concerns regarding the future trend. This kind of changed the game a little bit here, and I want to keep my eye on that to see how the next time it reacts to that rising moving average. If it crashes through there again, then all of a sudden I'm starting to wonder if this market is a little bit weaker than I would prefer. Today was a little bit of an interesting day as well. It kind of felt to me like the dividend stocks and the growth stocks kind of suffered in relationship to kind of the quality stocks. In other words, stocks like Apple were up today, but not your go-go momentum types of growth companies that were out there. So anyway, we'll see what takes place with that. Remember, those of you that are interested in those factors and that factor conversation, tomorrow morning I'll be teaching my factor-based swing trading class where we have that conversation and we talk about the rotation in and out of various factors. So if you're a premium or a plus member of Market Scholars, feel free to join me for that. That will be at 11 a.m. Eastern Time. All right, let's go ahead and take a look here at another chart. In this case, we're going to take a look at the 3 green arrows setup. And this will be chart 4D for those of you that are premium members following along at home with your own charting package. Now, as we're looking at this particular chart setup here, you can see that at this exact moment in time, we have 3 out of the 4 charts with a 3 green arrows signal. The background colors of the S&P 500, the Dow Jones Industrial Average, and the Russell 2000 are all green, suggesting that we do have a 3 green arrow signal on those particular indicators, or I'm sorry, on those particular indices, I should say. Over here on the Nasdaq Composite, it's still white as the background color. As I mentioned before, we effectively closed pretty much right on that moving average. If tomorrow the Nasdaq can have a decent up day, and that's a big if, we don't know at this point, but if that does happen, then there will be a very good chance that when David does the video for you tomorrow, Wednesday, that there will be a 3 green arrow signal at that time. But as of this exact moment, we just barely missed it there. Now remember, a 3 green arrows signal doesn't necessarily guarantee anything. It's just a colorful way to think about 3 different technical indicators and whether they are giving us bullish or bearish indications. And ideally, we'd like to line up as many bullish indications as possible. It usually is a way for us to take the temperature of the market and get a sense of whether we have any momentum or not. And right now is a pretty decent time for that. Obviously, today was an exception to that. Most of our markets were down today, but the momentum and the trend are still in reasonably good shape at this current level. And of course, that does change on a day-to-day or a week-by-week basis, which is why we do these videos as often as we do. So of course, you're going to want to stay tuned. But as of this exact moment in time, the trends are still holding pretty well, with the S&P 500 hitting an all-time high here today, and the Dow Jones hitting one yesterday, as did the Russell 2000. So the Nasdaq's kind of the laggard there from that perspective, where it's still holding on. Its previous all-time high was back in, it looks like it was February 16th in this case. So generally speaking, 3 out of these 4 charts hit all-time highs within the last 2 trading sessions, and therefore shouldn't be a surprise for you to assume that we are in reasonably bullish conditions at this moment in time. Let's take a look at our 1040 crossover method now. Remember, this is going to be a longer-term view here. Each one of these charts is 3 years in length, and each one of the candles that you see are 1 week in length. And so as we're looking at this here, you will see that for the most part, things have been going reasonably well, where the lines have been kind of stretching up and towards the right, which is what we want to see. Now, when we're looking at this particular chart setup, this is chart 4C. The orange line that you see here is going to be our 10-week moving average, and the blue line is going to be the 40-week moving average. And what we're looking at here is the crossovers of those moving averages themselves. So as an example, the S&P 500 had a bullish crossover, otherwise known as a golden cross, back here in the 1st or 2nd week of June of last year, and we've been bullish ever since. So you can see where if you can latch onto a pretty good trend, you don't necessarily need to time the bottom or the top. You have a lot of opportunity to make money on that juicy part in the middle. And, so far so good on that count. Anybody who would have bought the market last June and held on for dear life at this exact moment in time is probably sitting on some pretty decent gains at this point. Remember, that's not just the S&P 500. That is the case for all 4 of our charts at this point. In fact, the Nasdaq went to a bullish posture even before that. They went the 1st week of May of last year, not June. So the Nasdaq's been on a little bit more of an extended run, so therefore we can kind of forgive it for sitting out the last month or so here a little bit more than the other ones. It kind of had a bit more of a head start to begin with there. You will notice that there is a little bit of pinching going on here between the 10-week moving average and the 40-week moving average on the Nasdaq chart. Notice that orange line has come down a little bit to try to pinch with the blue line. It's not exaggerated at this point. I'm just merely pointing that out. That way we're not caught off guard. And you can kind of see that down below here with the PPO as well. Notice that green line is kind of drifting. It's basically telling us that these moving averages are starting to pinch together. Generally not considered the greatest of signs when we see that. We'd rather see those lines kind of separate from one another. That's telling us that the more sensitive, shorter term measuring approach is very bullish on a relative basis compared to the less sensitive longer-term approach. So right now we are experiencing a little bit more selling pressure on the Nasdaq. At least that's what this chart is telling us here. Whereas we've got reasonably strong market action on these other indices. In particular, I would point out the Dow Jones Industrial Average. That's a real strong upward ascent right there. That orange and that blue line are really starting to separate themselves right now. Remember, this has been a little bit of a baton pass here recently, where the Nasdaq has kind of passed the baton off to the Dow Jones, and the Dow Jones has been the one that's kind of taken a little bit more of a leadership role as this market has kind of fallen back in love with those big oil companies like Chevron and Exxon, and also the big bank companies like your JP Morgans and your Bank of Americas and those types of things. So therefore you have a little bit of extra movement there to the upside within the Dow Jones on a comparative basis to something like the Nasdaq Composite, which tends to do a little bit better when technology is hotter. All right, let's go ahead and pop on over to the internet here briefly. I always like to get an opportunity to say thank you to those of you that help support this free YouTube video. And the last time around that I did it on Thursday, you guys went to bat for me. I really appreciate that. 123 of you clicked the like there for me on Twitter. And remember, you can do that easily. You can either do it here while you're on our website and watching directly below the video just by clicking that heart right down there. Otherwise, you can find it pinned to the top of my timeline over on my Twitter profile itself. For those of you that watch this video directly on YouTube, we also have the link to our tweet that is in the description description area within YouTube. And then last but not least, for those of you that are on an email distribution list, you'll also find a link, a hyperlink to that tweet within the email itself. So 4 different easy ways for you guys to help support this product, and we really do appreciate you guys going out of your way to do that. Earlier today, I did teach my dividend growth investing class, and so if you're interested in the utility sector, we had an interesting matchup here today between 2 companies that are not all that well known. One of them was a little bit of a quasi kind of slash energy company slash utility company. One of the other ones was just more of a purely regulated utility business. So anyway, feel free to check that out on our calendar. That recording is posted for those of you that are premium and plus members of Market Scholars. And then David taught his directional option strategies class a little bit earlier today as well. Tomorrow, as I mentioned earlier, I'll be teaching my factor-based swing trading class first thing in the morning, and then David will be doing his options inventory trading in the afternoon. So make sure you're taking advantage of all that good stuff right there. Again, I will be teaching tomorrow, so it is Thursday and Monday that I'll be off on vacation, but tomorrow I'll still be in class for those of you that are our premium members. All right, let's go ahead and also take a peek here at what's been going on with the sector selector. I'm not going to spend a lot of time on this week because there was no changes. A very rare week where we didn't have any changes at all in the rankings. Usually you have a little bit of shake up here or there. But this was one of those weeks where every one of the rankings from the sector perspective held exactly to where they were previously. So last week was an up week for the stock market, and all of the sectors kind of went up and relatively in unison, at least not in a dramatic way that would shake up the overarching rankings there. So we still have energy, communications, financials, and discretionary kind of leading the way to the upside right there. Now, speaking of which, remember that this sector selector on our website gets updated on Friday evenings after the full week's worth of trading has been registered. But for those of you that are our premium members, let me pop back on over here to the Thinkorswim platform. Remember, you can always go over here to chart 1E, which is the sector selector 1 grid. And as I pull that up here, what makes this one a little bit different on the Thinkorswim platform is that it's calculating this information kind of in real time, and therefore I wanted to point out there was one little change here, and this can kind of play itself into our trade application example a little bit later, which is why I'm mentioning it right now, and that is consumer discretionary has moved up from number 4 up here to number 3 at this moment in time. I'm not sure why those colors are that way. Sometimes I think you need to kind of like refresh or something. Let me try something here. Yeah, there we go. This is a little bit better. That light blue consumer discretionary is now in the 3rd slot so far this week. So in other words, where you see these dots, these are Friday's official ranking levels. Where you see these dotted lines, they will change on an intraday basis throughout the week up until the next Friday. So as of this moment in time, of course, we've had 2 days. So Monday, discretionary stayed the same right there, but then with today's movement, discretionary actually went up to the number 3 slot. Now keep in mind how I'm ranking these is based upon the philosophy that I use for my Monday top-down trend trading class, which is we use an equal weighted philosophy here. So some of you might be looking at these rankings occasionally and wondering and scratching your head, well, how does this look like that? And what I was thinking was the opposite. It's possible you're thinking about a market cap weighted version. What I use is more of an equal weighted version. It gives me a sense of how are the soldiers of the army doing as opposed to just how the generals of the army are doing. And so consumer discretionary is a little bit interesting in that there are a lot of mid and smaller discretionary stocks out there that are doing extraordinarily well, but their performance is kind of being masked by some of those areas like Tesla and Amazon and Home Depot that have kind of fallen a little bit out of favor in the last month. So anyway, don't forget about some of those smaller companies within consumer discretionary. They've now worked their way up to the number 3 slot in our ranking system that we use here. All right, let's go ahead and take a look at some 12 grid analysis now. I'm going to start with chart 5A. This is our asset class 12 grid. And as we're looking at this, you can see we've got a couple of pink charts on the board. A reminder, the background colors of these charts will tell us what the current posture is according to the market forecast intermediate line. And so right now our two bearish charts that we have according to that indicator is TLT, which is a strongly bearish posture. No surprise, that's a really ugly downtrend that's been established right there for long-term U.S. Treasuries. And then we also have a weekly bearish posture on the U.S. dollar. This one's a little more surprising. Here you can see we've actually had a pretty resilient chart. In fact, it's trading above a rising moving average right now. Remember, those two things are not hooked to one another. More times than not, they will be one and the same, but there are occasions where the posture setting mechanism within the market forecast technical indicator slightly disagrees with a more simple moving average philosophy. So right now we're in a little bit of conflict there. The moving average suggests the path of least resistance for the US dollar continues to be to the upside, but the market forecast technical indicator is suggesting we might have a little bit of a topping out here in the near term on the US dollar. So we'll keep our eye on that situation, since that does tend to have a little bit of an impact on some of our other areas out there. Gold has had a decent little rally here in the last week or so, but it still hasn't been overly impressive. We've been watching this one closely. We've been looking at all of these oversold cluster signals, and the thought would be that it would have a little bit sharper of a burst higher and perhaps even take out that moving average. But that is not the type of move we are receiving. Yes, we had a pretty decent pop right here from the 8th to the 9th, but we've kind of more been drifting higher since then. We haven't been taking leaps and bounds higher. It's not like feeling like it's trying to catch up to the rest of the assets out there. It's more just, hey, it's trying to work out some of that that strong selling that had been taking place before. It hasn't really given us any indication that gold actually wants to turn around and start its own uptrend at this point. We'll keep our eye on it, but right now I think it still pays to be cautious around gold. Oil, on the other hand, continues to be impressive. Oil was down today, so that did pressure some of those oil and gas companies, but if you look at this chart for USO, it continues to be very, very strong. That dark green background color suggests that although we've sold off 3 days in a row on oil, it still is not enough to break the strongly bullish posture we have on this chart, and that makes sense. I mean, this is a runaway freight train that we have right here on oil prices. That's about as consistent of a 30-day moving average to the upside as you're going to find. This entity, by the way, USO is what we use as kind of our proxy here, hasn't even touched the 30-day moving average in the last 3 months of this chart. Notice how these prices come close to the moving average, but don't actually ever touch it. So that's how strong this particular asset class is right now. It can't even revert just back to a normal 30-day moving average philosophy. And that's somewhat rare. Most entities are able to accomplish that. But, you know, right now we've got a little bit of a runaway freight train. You could probably make the same case for Bitcoin. Right, you're looking at Bitcoin up here, and although we did see a bit of selling yesterday in Bitcoin, heard some news about India maybe limiting some of the cryptocurrency usage, but we got a little bit of a snapback here today, and similar to oil, we've never touched the 30-day moving average in the last 3 months on Bitcoin. Anytime it's pulled back at all, it's been a time to buy it. Now, it's been a little bit more volatile. You'll notice that the oil chart has been nice and consistent, a clear sign of higher highs and higher lows. And while we have that from a general perspective with Bitcoin, it's just been much more aggressive pullbacks and then much more aggressive launches higher again. Can make you a little bit woozy and nauseous if you're not used to that type of trading. But all in all, Bitcoin remains strongly bullish despite any controversies you might hear about in the news. You'll see that the U.S. Treasury yields did rise here slightly today. We ended at 1.62 on the U.S. 10-year Treasury, very close to 3-month highs at this point. You'll notice up at the top of the charts that our stock indices are doing reasonably well. However, there are 2 of a kind, not 3 of a kind here. And what I mean by that is the S&P 500 and EFA, which represents the foreign developed stocks, still look fairly strong to me. They don't look quite as robust as they did maybe a few months ago. Nonetheless, I think the path of least resistance continues to be to the upside. The odd man out in this case is EEM. This is your emerging market stocks. here there's a bit more concern, and I had mentioned this the last time I did the video, and then I followed up with many of you on Twitter the next day. Remember, we try to teach on Twitter between our presentations for those of you that want additional insight from David and I had mentioned on Friday where EEM still wasn't really impressing me enough to kind of change my mind of what I said in Thursday's video, which is it continues to be a little bit of a concern. Now, today we do have a light green background color, so maybe we can take some comfort in knowing that there is a weekly bullish posture according to the market forecast on EEM, but we are still a long ways away from that falling 30-day moving average. And so my fear is that it's just kind of exhausting itself just trying to get off the bottom here, let alone what would the type of energy that would be required to start a brand new uptrend. So right now, I remain pretty concerned about EEM here, at least in the short term. If we see the US dollar start to break below the moving average, that's a different story. Then all of a sudden, I think EEM has a nice shot in the arm to the upside. But right now, with the dollar hanging out above the moving average and EEM hanging out below the moving average, right now my assumption is that we've got to be a little bit more cautious around EEM and those emerging markets going forward. I tweeted something here earlier today about China, of course, one of the key members of the emerging markets index, and how a lot of their companies only have an exchange here in the United States. They don't have a secondary stock that trades like in Hong Kong or something along those lines. So, keep in mind that there are different ways to think about emerging markets. This one here with EEM would not include something like those that are, solely in the exchanges in the United States. This one would concentrate on those that actually trade on exchanges outside of the U.S. Anyway, let's go ahead and take a look here now at our next 12 grid, which will be our sectors. And as we're looking at this, we got a clean sweep across the board. Love seeing that. We do have, some charts that look better than others. Naturally, that's going to be the case more times than not. But it is nice to see in unison green across the board here in the United States. Now, remember, this is the market cap weighted version. So there might be other ways to look at these sectors where, the information might not be quite as rosy. But at this exact moment in time, we do have strongly bullish postures on all 11 of our sectors here in the United States. Now, in terms of which ones look better than others, you can see here communications continues to impress. And I pointed that one out specifically on Thursday as well. It was on that candle right there where I said, wow, that is really impressing me, because we easily got up and over this prior resistance area. And a lot of times communications and technology had been kind of hooked at the hips, so to speak, because of their makeup, right? The idea that communications is largely driven by the big internet companies these days, like Facebook and Alphabet and Netflix and those types of companies. You tend to find that they move in unison with technology more often than not. This is a rare moment in time where communications, from my eyes perspective, looks a lot stronger than technology. And so that is part of the reason we concentrated on communications from a sector perspective yesterday in my top-down trend trading class there. So keep your eye on that area. There are a lot of old line media companies in particular that look quite strong here in this environment, whereas technology, you are seeing a lot more chop. So while it's nice to see technology back to a strongly bullish posture, you still got a lot of work to do here. This was a little bit of a gut shot here over the last month for a lot of those tech companies. So in terms of some of the charts that I like, I would say communications looks really strong. I like the way that industrials looks. You do have financials that still look pretty strong. Energy still looks pretty strong, although it's a little healthy little give back there in the last couple of days. And then in the bottom rung here, you'll notice that real estate all of a sudden is looking pretty impressive. That was a nice little shot out of the cannon right there for real estate. We had 1, 2, 3, 4, 5, 6, 7 straight up sessions. Today would have been the 8th, but we closed exactly flat. How about that? And so perhaps it needs a little bit of a breather, but along the way in its 7-day win streak there, we were able to get up and over that prior resistance area right there. So all of a sudden, some of those REITs and other real estate plays are coming to life. All right, let's go ahead and get into our trade application example now. And I'm going to be taking it from the discretionary sector. In fact, if I were to pull up the stock selector tool, this particular company I'm taking a trade on is not big enough to be part of the stock selector, but I wanted to show you one of its competitors real quick just to give you a sense of how it looks from a top-down trend trading perspective. And so let me go ahead and find APTV, and that is Aptiv. And this is part of the auto components industry group. Notice that Aptiv is fully colored in a green row across the board, which basically means that it is a stock that's in the top third of all the rankings on the stock selector. The sector that it belongs to, in this case consumer discretionary, is also in the top third of all sectors on the stock selector tool. And then its industry, auto components, is in the top third of all industries. So you kind of have a clean sweep there. Again, the trade is not going to be on Aptiv, but it is going to be on one of its smaller competitors that would feature these same top-down analysis highlights here. So let me go back on over here now to the Thinkorswim platform and show you which stock I'm going to reference here. Remember, I've already done this trade. The trade's already been taken, and I've already sent out the telegram to all of you that are premium members. But the stock in question is Dorm. And no, I'm not talking about college dorms here. I'm talking about Dorman Products, which is an auto parts manufacturer. And as you can see here, has had a pretty solid series of higher highs and higher lows over the last 3 months of this chart. We just got done with a pretty ugly 5-day pullback right here prior to today, after it had just hit a new high up here above 113 just prior to that. So you hit this new high, you pulled back 5 straight days. Today appears to be the day where the bulls have had enough. They're kind of getting sick of those bears selling off the stock, and it's time for them to take control once again of this chart. And so we had a nice solid 2% up day here in Dorman Products. We actually closed above yesterday's high. So for those of you that have been with us long enough, you'll know that could represent what's known as a Kaholt pattern. Kaholt is just an acronym standing for close above high of low day. Yesterday being the low day, so yesterday's high would have been 105.87. Today it closed at 106.19, clearly above yesterday's high. Now, that doesn't, of course, guarantee any success, but it gives us a sense that there is a strong enough push into this stock today that has wrecked kind of that downward trend that we've been stuck on for the last week. And now the hope is that we get a little bit of a push higher here. You'll notice that with yesterday's low, it basically kind of comes right across this prior candle right here and a stretch of these candles in here, again with the idea of this old kind of double top representing a resistance area, which then turns into a support level here once it's breached, as it happened here about a couple of weeks ago. So we breached that double top finally, went on to a new high, went back and retested those levels. Hopefully that retest yesterday was good enough to now start pushing this back higher, just like it did after this pullback here, it went up to a new high. And just like after this pullback here, it went up to a new high. And this pullback here, it went to a new high. And the hope is we do it again. Now, if this stock has the ability to get to a new high in the relatively near term, we should be able to get out of this swing trade. You can see my levels up here on the chart, and I've got the specific data there for those of you that are our premium members in our Telegram app if you're looking for that. But you get the general idea that our stop loss will be a little bit below 100 here, and our upside price target is just shy of a couple of these prior high candles. So if we can get back up into that vicinity, we should be able to take a max gain on that. And of course, a lot of that depends upon what's going to go on with the market and so on and so forth. But what we do know is that given the information we learned on the stock selector, this particular company does have strong top-down analysis at this moment in time, and so I thought let's give it a go here and see if this bounce can hold. So that's what I've got for you here today. Again, a reminder: I'm not going to be with you on Thursday. I'm taking a rare vacation day there, and so there will be no market outlook video on Thursday. But I'll be back with you next Tuesday, assuming everything goes smoothly between now and then. So anyway, if you got value out of tonight's video, one thing that you can do for me to thank me is just simply go over to Twitter and click like there for me. That will go a long way for us to continue to do these videos for you. So anyway, with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.